Martin, Ian, Mark, Bill, Mark. How are you? Jimmy Blossom, welcome. All right, Discord is set. Ernest, a little sample news. Ernest, yes, so we'll talk about the news. Okay, give me 1 second and we'll start. All right, thank you for waiting. Let's start. For you, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. If you're new to trading stock or options, I encourage you to visit the link on your screen, optionscreen.com, so you understand I'm not registered with FINRA nor SEC. Should not be assumed that the future trade picks will be profitable or equal past performance. This presentation is for general education and information purposes only. Okay, now that we got disclosures out of the way, trading psychology is important, right? The goal is to become, excuse me, a disciplined trader. I encourage everybody to keep a journal, and in your journal, document every single trade. Have written down rules. Right, is how much cash do you have in the account? I propose 30% on average, 30% of your portfolio to be in cash. Portfolio drawdown is the second most important, basically saying how many positions do I have and what is the maximum exposure per position, right? I think that's the universal risk management. You know, whether you're a big hedge fund and you're doing what if scenario on your model and say, you know, if market drops another 5% or market drops another 10%, you know, what will my portfolio look like? Regardless of how much market is going to go up or down, the idea is not to risk more than 10%. If you have 4 positions, 2.5%, I think that's on conservative side, right? But at least, especially if you're new or you're still kind of learning the skills of trading, then I think that's the right approach. 4 positions, 2.5% maximum risk. You, especially in the beginning, you want to trade maybe liquid stocks that have weekly options, that have large volume, trades and pennies, right? Well covered, hard to manipulate, have strong positioning, options data, strong positioning that you can look at internal positioning where supply meets the demand. And some of the other rules, ABC pattern, we talked about that. Look for more time. Right now, probably June. You know, we're already approaching, you know, a few weeks away from May. Then I would start June contracts, try to close May contracts, and allow more space. Right? Do not sell naked options. So these are some of the checklists. And before you put on a trade, you would just go through that checklist and You put the trade on, and then if you never, for me, the criteria is simple. I mean, ideally, if you haven't broken any of the rules, you would give yourself A and B. If you broke any of these rules, C or D. To make it more simple, I would just say, as long as your position was not down more than 2.5% at any given point, you give yourself A and B. Avoid C's and D's. Good rebound so far. We are at 506 level, right? We talked about that this is the first overhead resistance. We're a little bit above that, maybe 512, 50-day moving average, reclaiming 50-day moving average. So if you're doing day trading, model basically sees 505 is that we're not gonna make it. It's still downtrend. We're still trading. Model basically sees 506 as overhead resistance and 494 is support. I mean, if you're day trading, I would put 500 as your support. I think we've looked at the positioning on spiders. Let's include Friday, May 26th. Right, so today is Wednesday, Thursday, Friday. At least as of right now, 500 is pretty well positioned. So 500, if I'm doing day trading, short-term trading, I would say 500. I would get out if we reach 500. On the upside, 510, right? First level of column 7 on the downside. Personally, I don't think we're going to break up a set. So the closer we get to the top, I would start thinking about maybe trimming some of your long positions. So that's spiders. Again, short term, I would consider 500. If you're doing day trading, maybe 1% stop loss, a little bit more. And if you're thinking about, weeks or a few more, beyond Friday, then Friday's low. Friday's low are your two support, right? Support number 2, support number 3. And then we need to break through this level first. So not to risk $250 on a $10,000 portfolio. If you do day trading, you need to have $25,000. I propose to risk less than 1%. That's $250. If you put in 1% stop loss, $5. You just take 250 divided by 5. That's 50 shares. If you're doing longer term trading, $250 on $10,000 portfolio, 2.5%. I would use $10 as your stop level. And so you take 250, right? That's stop loss. You take 250 divided by 10, 25 shares. In terms of, so on one hand we have macroeconomic data. They're on the, not as on the in the background. So we're back to 10-year yield, right? Yield. We have auction. The most people talk about is the auction of treasuries, right? And treasury, no new signal in dollar. Japan. A lot of people talk about Japanese yen, right? That if you look at the U.S. dollar and Japanese for a long time, and a lot of people are concerned about that the Bank of Japan will intervene. And if they do, the dollar, there could be a lot of volatility in the treasury market, equity market. Exactly when it's going to happen, I think Bank of Japan is actually today meeting Japanese yen to get a little bit stronger. Well, QQQ up 70 basis points. Texas Instrument, Tesla had better than expected earnings. Semiconductors are up 2%. Spiders a little bit higher, flat. Small caps underperforming and carry underperforming before market opens. In terms of earnings, I think we did future. You can find the same thing in the elite circles. So I did put, earnings is still pretty volatile. So you either want to be long volatility or short. Usually, the way I look at the volatility, right? The skew. Is there a call skew or is there a put skew? If there's a put, you want to be long volatility. So Tesla, I'm long the volatility, right? So 170, 175 call spread. I'm trying to close it at $2. So again, I'm risking 50 cents, 54 cents. and trying to make $2 to $5. So far, Tesla is up 13%. Tesla is up 13%, so it's not at 170 level, but it's getting close. And again, the reasoning behind this was the skew, right? That there's a call skew, people buying a lot of calls, and it's not just a random number, but the highest positioning is at 175. Right? So, I mean, they didn't hit a home run. I think the reason it rallies is basically because Elon Musk, everybody loves Elon Musk. I love Elon Musk. My friend just got that Cybertruck, so we're all excited. And he's basically saying that this more affordable version of the Tesla is going to be available sooner than everybody expects. But there's still their margins, their revenue, it's the cash flow, it's all down, right? All negative news. Despite all the negative news, just like in United Airlines, when you have large positioning, right? When you have large positioning at these levels, it could move to that strike price. So that's the reasoning behind Tesla. We'll see how the market opens. So I actually did. So let's watch. So we have Tesla, and I think I did AT&T, right? AT&T. All right, so Tesla is up 14%. Let's see if it can drift to 115 level. Any questions so far? Earnings down. Good. So these are some of the stocks that I traded. So Visa is up 2%, Tesla is up 13%, Texas Instruments is up 7%, STX is up 3%, AT&T is down up 2%, Boeing pretty popular stock. That looks like it's drifting lower. Yeah. Let me know if you guys have any questions. I'm watching Tesla. For now, it's up 12%, still away. Let's see how much is the spread worth right now. So it's worth 68 cents. So it's profitable. Reaching level. One thing is, again, I can, because I have 170, 175 call. I mean, I can close 170 call and buy 180 call with the idea that it might not get to 175 on Tesla. So for now, we'll just watch. Or I can close it. Well, now it's kind of flat. Texas Instrument. So let's look at position Texas Instrument. Texas Instrument is mainly was the put skew, right? So you do have a pretty large position in 185. in May, and front months 180, 185. So 180, 185. And it did reach 180 and kind of trading flat. So we have 6 minutes into announcement. Let's see, Boeing. 174, 177. I'm looking for 3 candlesticks to decide where the support and resistance. So Boeing, you see it's at 174. Let's look at Tesla. Working. So it looks like 158 is support on Tesla. Let's look at the market. See, so IWM is flat, Spiders flat, banks are flat, Arc Innovation is up 1.5%, semis save Tesla and try to make money since it's not going up. 170.75. So I can close the long leg for 87 cents. $0.78. Okay, so I closed the long leg for 73 cents. And I don't want to be naked, right? I still have 175, so I'm going to go in and buy 180 call. Keep the 80 cents. I mean, it may or may not. We'll see. 185, actually, hold on, 170, 175, 180 is 16 cents. So I'll buy 118 for 16 cents. For 16 cents. So I'll hedge it and maybe by the end of the day just close the spread. Because now I used to have a debit call spread, now I have a credit call spread. That the idea that Tesla is not gonna get above 180. Mostly right now is the put skew. So it's not gonna get above 180. I mean, in May 17th, there is a big, that's the first strike. There's a lot of positioning at 200, but that's May. And it doesn't look like, at least as of right now, that any questions? So Tesla 164 is the high for the day. Okay, so 15 minutes. So now that you have 3 candlesticks, then you can determine where the support and resistance levels are. So it looks like right now Tesla is, yeah, so 180. Any questions on the trade? Wouldn't this be a good time to short Tesla? it's up 10%, and there's a big position. I mean, Tesla just yet. Plus, it's a strong move to the upside. I'm not sure if you want to short Tesla right now. There are so many percentage inputs. Should this indicate the banks? Do you find it unusual that there's so many 500 December 24 puts? Could this indicate the banks are position insurance trade privilege down? I mean, if I understand it correctly, the large put position is good. Right, in spiders, that means the position are hedged. December of 24. This 24. I mean, not huge, but there are 460 position, right? So some people think that by between now and December, we're going to get 460. The good news is that the bigger that position, the less likely it's going to drop below 460, right? So if December is 460, let's say what's in September? Not as much, all over the place. August, June, 460. So if across the expiration months and across strikes, 460 is the large position, that means we're probably not going to drop to below 460 anytime soon. So that's how I would interpret this. The first expiration is May 17. I mean, same thing. We do have pretty large position in 450, 460, but still pretty sizable position now at 500, right? 50,000. So people are concerned about a lot of 500 puts. That's good. That means right now you need some negative catalyst to break 500 level. Right? In short term, it's probably not going to happen. Texas Instrument is weak. Back. AT&T looks like pullback. All right, let's review other positions before Bob gets upset. What does the option position indicate about Meta? So Meta, let's look at Meta. Announcing earnings, I think, after the close. Very similar to Netflix, except this, okay? So outside of May 17th, it's pretty well positioned. I mean, not a lot, 600, 300 for Meta, that's not a lot of positioning, right? But at least based on what we have, 550s to the upside, 10% to the upside, and 450, 470, I mean, there's a position everywhere, 450. So one standard deviation on Meta is about 10%. Two standard deviation is probably 20. So right now, most people, 76% of the people that trade options, and based on implied volatility move that basically says, excuse me, I apologize, that the stock can go 550 all-time high, or 450, where it's going to break, get into a lower Bollinger Band, basically the open print after the last earnings, right? So it's either going to give up all of the gains since the open print after the previous earnings, or it's going to make all-time high around 550 to Netflix, right? So people it's not all kind of all in, right? People are concerned. May 17th, somebody doesn't think we're going to get below 465 and basically put in a big position, and this is put queue. Sorry, calls queue, which is sell of the 450, this is 465 strike to finance, right? Risk reversal. So you're selling 450, 460 put because you don't think we're going to give up all of the gains. And, Meta just announced they have new AI tools and they're going to retain the users and blah, 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 blah. Everybody's very positive about Meta. So people are selling 460 put to finance their calls, risk reversal. That's an opportunity. That's great, as long as they bid on top, bottom, and give positive forward guidance. If they miss any of these metrics, and I don't know if they will or they will not, right? TikTok they're supposed to benefit from, if TikTok is being sold. But anyway, if there's any negative news, it could quickly get to 465. So those are, I would say, two scenarios, right? We either stay in this range, right, just like Tesla, probably not going to get to 180. Biggest position is at 175. Where's Tesla now? 162, right? So it's at this strike, I think, right, or here, 165. So it wasn't, it didn't, because it didn't beat on the top line, it didn't beat on the bottom line. It's kind of mixed bag. So it's staying at 162. Say Meta is positioned similar, right? If they beat on the top and bottom line, I don't think it's going to go much further than 550, right? I think it's this guy, 550. If they miss on any of the metrics, they will quickly get to 465. Because this is pretty large position. Assuming that this is not a mistake, let's just look. Always want to, what is it called? Twitter? No. I mean, if you have a stock, this is where you either sell call or buy put. Or, you could be contrarian. You same thing I did in Tesla. You can buy a put spread on Meta and buy a call spread, right? Because it's probably, going to make, I don't know. Tesla is overbought, Meta is overbought, so it could just not do anything. It's possible. Meta. So May expiration, May 17th, somewhere around 165 strike. $465 in May. 465 in May. 465 in May. Here, 43,000. Looks like it's a call. Okay. So I guess there's some big position at 465 as calls. Right? And it appears as negative. The seal appears as negative. That's interesting. So this is not selling of the puts. This is somebody bought call. Okay, the same thing. Whether they're buying a call, deep in the money call, or they're selling out of the money put. Any negative news, and dealers would have to defend their position, right? This 465 level, right? Because this is a very large position. For whatever reason, somebody spent millions of dollars buying these calls. Meta and possible earnings play, please. So here on possible earnings on Meta, I'm usually concerned about this, and it is a cold skew. There's some, because if there's negative news, if they missed on any of the metrics, it will probably be $465 stock. So for that reason, I would buy a put spread, kind of a contrarian, and I would finance it by selling the call spread, because I don't see anybody buying a lot of calls, right? So it's probably well priced in. So I would do the opposite, basically. I would do risk. I would buy a put spread, out of the money put spread, because I think, if there is negative news, it could close this gap, right? Just like Microsoft. Microsoft didn't have any bad news, but it gave up all of the gains, right? Is Microsoft better than Meta? I mean, I personally would buy Microsoft, but who knows? But that's my inclination. Sell out of the money calls and finance and buy puts. Ian, Tesla is going down. I think China will be too big in electrical car making. Okay. It looks like it's grinding higher. Probably closed that call a little bit too early. Should have waited. Is it breaking? Well, it's not breaking out, but it's at session high. It's 902. Not sure if that's going to continue. So it looks like it's breaking out, maybe. Let's see. So it looks like Tesla is breaking out. Maybe it got in a little bit too early. So you can see kind of this effect of Dana, right? Positioning, right? So it's probably going to gravitate toward 175. So maybe, one way to hedge it, I can buy Tesla stock. So let's just buy Tesla, right? One way I can hedge it, I can buy a stock. It's still 175 is $10 away, 5% away. So delta 20, delta 30. So maybe buy 20 shares, 30 shares of Tesla. Right, with the idea that it could gravitate. If it's going to break out, then dealers are going to get nervous, and they would have to defend their position. Not nervous. Dealers have to be delta neutral. They are not nervous. They delta neutral, and there is a big position in 175. So it could pull, right? It's at 165, right? Position 170. But it could get to 175, right? 175, delta, delta 20, delta 30. So I'm buying, 20 shares of Tesla, right? And, if it does get to 175, maybe close it. Maybe close it. So put, sell. and just monitor it. What is this strike? This is 180, yeah, 175. So let's assume it's get to 175, so maybe 173, 173. Okay. So maybe it can move up, we'll see. I mean, it looks like it's breaking out, right? So you could get deals have to be delta neutral, right? And because of the Vanna flow and the charm volatility crushing determines strike for the meta put spread. So positioning chart. To answer, you do need to care that for 65 calls, somebody is buying 43,000, right? You multiply this by 100, you multiply it by 465. This is a big position, right? I don't know why, but somebody thinks, it makes sense to own this calls. So obviously they're very bullish. I mean, it didn't put this position yesterday. You have to look at the chart. I don't have a chart. Actually, bar chart. Let's see. Do they have 465 chart? Option prices. Tesla. 465 strike. No, not Tesla. Not Tesla. What was I looking for? Yeah. Let's look at option chart. Call 1 year. This is the price. This is what's volume. So March 26th. All right, so looks like most of it was bought on March 26th, right? Very large quantity. So on March 26th, what was March 26th? March 26th. Nothing special is on March 26th, but somebody, I mean, it's not somebody, this is probably some big hedge fund or private equity basically thinks that it makes sense to buy 465 put in very large quantity, right? It's a big bet, right? It's a huge bet. So you look at the position, supply and demand, and somebody sold them these calls, right? So somebody sold them, that's dealers. So if there's negative news, dealers will have to unwind that position, and this person or company is gonna lose a lot of money. Obviously, if it's gonna dollars. I need to buy shares since I could not buy spread. My preference on charts. Good. Thank you, Ian. Fundamentals can but the trader. Says in basic drop of 75%. I mean, to drop, Kevin, to have such a big drop, back burner. The only thing that I can think of large moves to the downside, right, is this macroeconomic data, right? Today, I think the reason market is pulling back because the durable goods, right, I forgot to discuss that, but the durable goods came in better than expected, right? That means economies, yesterday PMI was worse than expected. Today, durable goods is better than expected. So yield is kind of trading sideways. Yield is trading sideways. If it does break above 470 level, I think, and gets to 5 level, that could be a pretty big pullback. Not big pullback, but at least 10% pullback. Right now it's been 5, that would make 10%. But as long as there is no geopolitical risk and earnings, we have General Electric, we have American Express, we have Tesla, Texas Instrument. As long as the earnings are better than expected, it will push the market higher. The only thing that can push the market lower, very bad economic data, which doesn't look like that's the case. So those are the two forces that will propel market one way or another. For now, QQQ up 1%, semis are up. Is this a V-shaped recovery, right? That's scenario number 1. Scenario number 2, it's, ABC pattern, right? So I think we're trading in wave B, right? And then wave C is coming. As long as interest rates are elevated, we have auction today. I think 5-year treasuries. And it's the largest. Government has a very big debt, and it's the largest auction ever. If it doesn't go well and interest rates have to go higher, well, that could be a problem. So those are the two forces. How's Tesla doing? Guess we did get to 168. Okay, so the call spread, I'm down $20. So I think I could sell the Tesla. If it gets to 168, I think I could close it. Let's see. Oh, well, I'll monitor it. If you have time, monitor it. I'll put for now 168 and try to close. Let's see, 167. 60. 167.60. So if it gets to 167.60, I would get out of the trade, close the spread, and this would be a profitable trade. Right? If you bought 20 or 30 shares, this should be a profitable trade. All right. What else? Visa is up 2%. What's going on with Visa? $9.14. Visa. Tesla, Texas Instruments. All right, 916. Okay, let's review quickly the positions. All right, so we have Tesla position. Okay, so Amazon earnings next week. Bullish call spread. This is remaining of FCX. Let's see. Remaining of the earnings trade. Still long gold. Let's look at gold. Let's look at Amazon and gold. So Amazon, it's not next week. It's Tuesday the 30th. So yeah, it is next week. So for now, it's fighting for the 50-day moving average. Gold trying to, consolidate. So we need at least a couple of days of higher highs, higher lows. For now, it's still bearish short term. General Motors, that's leftover from the earnings. NVO looks like NVO is rebounding. I think it's pulling back today, but yesterday had a pretty sizable rally. So it's fighting for the 50-day moving average. Earnings is in the week. Procter & Gamble not going anywhere. Leftover of earnings. So QQQ, still have QQQ put spread. I still think ABC pattern that the pullback is not over. So for that reason, I'm keeping QQQ put spread. That's in June. So there's not a big time decay if you have a little bit more time. And the price of the spread is not as sensitive to the move of the underlying ETF. Another way to hedge is SH, still have SH position, still have silver, gold and silver kind of consolidating after a pullback. I did put a 17.5 call, expire next week, looks like, and then Tesla. Tesla and XLE. Okay. So AT&T, I mean, it did rally close to the strike, but then it reversed, similar to Verizon, right? So didn't have enough time to react. So it looks like similar price reaction to Verizon. Hits the 17 and then pull back. And then we talked about Tesla, and then XLE and XLF. XLE also looks like it's losing momentum, 95, 91. How's the crude oil doing? It looks like 80 level is holding. So for now, crude oil, I'm still long energy. XLF, I have the put. I think, again, ABC pattern. So I closed the stock that I had, right? It kind of recovered most of my losses. All right, any other questions? So, Kevin, thank you. Congress did pass the help to Ukraine and Israel. Part of it was the forcing TikTok to be sold to US-based company. And Meta could be any questions. All right. As usual, we have a lot of people. I appreciate that. Thank you for participating. Larissa, Alon, Aviva, Carol, Chuck, YouTube guys. Thank you for YouTube. Please hit the subscribe button. If you like this video, please like it. Thank you very much and have a great day.